And I think we're starting to see the common theme of brick and mortar making investments, taking some short-term pain, and all of a sudden you start to see the returns, and they're monumental returns when you do it right. And I think Target's one of the several retailers, higher rated, higher credit quality, more flexible, that are starting to generate serious traction.
Yeah. In your view, we had strong results from Walmart, strong results from Target. Where's that share coming from?
I think it's coming from the lower end of the credit scale. We've got 20 names that we consider to be distressed. They're the givers, the Targets, Walmarts, TJXs, Nordstroms, Home Depots. They're the recipients of the ability to be able to move in this environment.
Who are those 20 names?
Oh, boy. You've got Sears down there, J. Crew's down there, Neiman Marcus, Penny's not there, Neiman Marcus, a bunch of small specialty retailers, but there's some scale down there, and they're donating share across categories. They're in tough positions because they can't make the investments that Target's making and Walmart's made and Home Depot's making, and they're really in a tough spot.
So you're a credit analyst, and so when we see strong reports out of these large guys, what happens to the debt of those distressed? Do they get worse, or does this rising tide lift all boats, so to speak?
It's kind of a barbell, and it's done on an individual basis. So if you've got, for instance, I'm going to use the great business school analogy, which is the widget. And if you're an isolated widget, all you sell are widgets, and all of a sudden Amazon, Target, Walmart, Home Depot, any of the big guys start to discount widgets, you got a problem. And that's what we're seeing. We're starting to see a lot of separation. We use a barbell analogy, we use a teeter-totter analogy, and the rich are getting richer, the poor are getting poorer in retail, and I think that trend's going to continue for the foreseeable future.
Can I ask you talk about investment paying off? What's the investment that Target has made that's been probably the best play that they've had? Like what is generating for them the most traction?
I would say the private brands that the company announced in February of 17, late February at a meeting. I was in the room. It was similar to the Walmart meeting a couple of years before that, where Target announced, Brian was on stage and announced, we're going to make investments. It's going to cost us money, but here's the payoff. And similar to Walmart, the stock got hit, but these investments are paying off. The private brands are the key. Target, prior to that, had kind of fallen into a promotional morass where, after the credit card breach, the store was on sale too often. There wasn't a lot of compelling fashion in the stores. Target was not there anymore. And I think Brian and his team have come in, reinvigorated the stores. They've spent money on the stores. They've invested a lot in these private brands. And that's the differentiator for Target against a Walmart or an Amazon. They've got product that nobody else has.
So that's interesting. It isn't so much that they're competing with their online presence or making it easier for consumers to order online and pick up at the store and actually taking the online retailers. It's actually carving out a niche with the private brand that's bringing the consumer in.
Online would be 1B. 1A to me is the private brands. Online, yes. The number that was announced after Q4, where 70% of online sales had been touched in the store, that's gargantuan progress for the online business. Target got a late start. It didn't control the website until a few years ago, and it was able to leverage that development into a really good mobile app. And as we know, mobile's becoming the preferred mode of purchasing online, and Target's been ahead of the game in mobile. So I think we're seeing, again, a payoff for the investments. This is an example, I think, for investors that patience will pay off. These world-class retailers, the Targets, the Walmarts, the Best Buys, Home Depots of the world, TJX, it doesn't happen overnight, and it's not free. It takes time. It took Amazon 15 years to scale and spend a lot of money, and Amazon still spends a lot of money. The brick-and-mortar guys are doing the same thing.